Afternoon, how are we all doing? Afternoon, Steve, Gulam, Amy, Burke, Virginia, how are we doing? So just finishing a back test off. I've got that in there. Okay. So just been afternoon, Bellino. Just been back testing the new 5-minute opening range breakout. Just the instant entry going with the direction of the initial candle. Terrible results, awful. So it's that this sort of white paper that somebody produced, Peak Capital Trading. So I've built an EA to backtest their strategy. Awful. It's just not even worth it. Can't get any profit. I've only tested it over 6 months. It's absolutely terrible. Compared to my opening range breakout pending order strategy, it smashes it to pieces. So I've only tested it on the NASDAQ, but I'm not even going to pursue it. It's terrible. 26% drawdown for a 15 grand return. It's just rubbish. Whereas my version is producing 17% drawdown and $86,000 return. Yeah. Not sure about that one. But I have visually tested the EA to make sure it's working right, and it is. So, I don't know. Afternoon, Martin. Right. Let me just minimize that for a minute. So this morning, we've had a few ADRs hit. So no news today. We've got the bond auctions at 6 o'clock. Apart from that, there's no other news. Financial juice this morning, no news whatsoever. Since we had Haskell this morning saying that they're going to increase the interest rates for the pound, there's been no other news. The only really interesting bit of news is oil. So oil has broken back down again below that weekly low. So we looked at it this morning and it looked like it was coming down. It's absolutely collapsed again. So oil's in real trouble at the moment, real trouble. We're coming back down to the monthly low. So this area here, this monthly low, which is ADR today, is from a risk reward potential, very good looking buy opportunity. So if it does get down to ADR today and we do get some kind of reversal alert on M15 or hourly, you're probably going to struggle. I mean, if it gets down to ADR, you're going to get in sort of there. M15 is probably your best bet. So if it does get down to that monthly level today, ADR, M15 reversal alert, wherever it may be at the time, is for a just standard risk reward based stop loss based strategy. Not a bad looking entry. So it is range bound here. We are potentially in bullish market structure. So going from here back up, but it's really, really not able to get going, is it? So oil in all sorts of trouble. Is it the end of oil? Electric takes over. Who knows? Yeah, that's stuck. Really stuck. Afternoon, it's time. Afternoon, Brian. Afternoon, XR update.news. Everyone enjoying the economic, political, proxy, and culture good evil wars? Biblical? What a time to be alive. I know. What time to be trading at the moment? Absolutely nuts. Everything's absolutely nuts at the minute. So DAX this morning, ORB was the pre-market 5 ORB was in, out, done, job done, fast, quick, money, easy, simples. And then we pulled back, broke out the 5-minute ORB to the downside, pushed up, stopped that out, flew up to the upside. So yeah, would have made money today either way, whichever way you went, whichever strategy you went with. So not too bad this morning, but not great, nothing amazing. 5-minute pre-market still the one to be on. ADRs today. We got quite a few ADRs. So the Swiss franc has been tanking today. So everything Swiss franc based has flown. So Aussie dollar Swiss hit to the upside, Swiss yen hit to the downside, Euro Swiss hit to the downside. Sorry, to the upside, obviously, Euro against the Swiss. And New Zealand dollar Swiss. So US dollar Swiss is the only one that hasn't actually done the business so far today. So that's coming off of 125 ADR. You had your reverse alert there, super tight. Nice end pattern reversal going in on the New Zealand dollar Swiss. Back down into there, into that propulsion, or back down into these highs. US dollar Swiss is the only one that hasn't hit yet. It's still a fair way away, US dollar Swiss. But all these valid shorts, especially the Euros, Aussie dollar Swiss. So Aussie dollar Swiss in short on that one on H1. This is an H1 M5 mean reversion short. Target on this wherever you fancy, really. What's that? 40 pips. Somewhere around there would be a good target, which is previous day's high. That's obviously last week's high there, which would be a good bounce point if it's going to continue, but we'll see. So Aussie dollar Swiss, you got Swiss yen. Obviously, that's a decent hit to the downside. Nice double bottom going in there at ADR. So you've had your 5-minute reversal alert on that. Oh, no, you haven't actually. Sorry. Just about to get your reversal alert on that. Still holding at the moment. The other one we've got is the euro pound. Euro pound had just got out of this morning. So we had the euro pound long from there yesterday. Straight in, straight out. Job done. Nice, easy in-out trade, which is do with those at the moment. And that's just come up and hit ADR. We are still on our way to 125 ADR. Not stopped all day, that one. So the pound, nice weak movement across the board on the pound today. Euro has had a little bit of a rally, which obviously means euro pound has been kind of the perfect storm today. Nothing particularly strong on the euro, but really weak pound. Euro holding up fairly well today. So obviously this one's gone the furthest. So there's all your ADRs. Nothing's hit the weeklies yet. Wasn't actually expecting these to hit today because obviously it's a big news week. So I went through the news this morning. So if you want to watch that, go and have a look at this morning's. But it's a massive news week this week. We've got the Bank of Japan rates. We've got the US CPI. We've got the US rates. We've got the euro rates. We've got Aussie dollar unemployment. We've got pound GDP. We've got New Zealand GDP. It's just chaos this week. Total chaos. So today is sit here, get ready. Tomorrow onwards, absolute nuts. So that's this morning. There's RSIs. There's quite a few RSI extensions as well. This Aussie dollar New Zealand, which is the main squeeze at the moment, still stuck. Still not going anywhere. So we're in an update. So that's where we closed on Friday. We've pushed up this morning. Had a little rally at the beginning of London, then it pulled back down again. Now it's pushed back up again. So we still haven't gone anywhere. Last week's high is still intact. However, we haven't gone down. So Aussie New Zealand stuck sideways day 4. What will happen? We will find out this week. Okay, markets are about to open. We have 40 seconds. So all of the US indices, fairly stable so far today. Nothing gone crazy, all just kind of pushed up, pushed down, sitting basically where they are. So we'll see what happens with these. See if we can get some decent opening range breaks. We've still got the DAX gap fill to the downside to do. So obviously we pushed up this morning. That was that trade this morning. It was straight in, straight out, done for $800. We've pushed back down. We didn't manage to get back down below the low though. So buy limit gone in on the Dow, missed the entry. Got the buy on the NASDAQ. S&P's gone nowhere. That's annoying. Oh, we have got the buy because it's retraced. So we triggered long on the Dow, long on the NASDAQ. So a fair bit of volatility. That was quick this morning, this afternoon. Quick moves across the board. Looks like we're going short. So stopped out on the NASDAQ. S&P still in. Shorts S&P. Sorry, Dow we're still in. Just about to stop out on the Dow. Stopped out on the Dow. Still in profit. This is the thing we've got to be careful with this. I actually want this now to take additional trades. It's not going to because we're actually in profit for the day. I need to have a think about this from a logic perspective because, wow, look at that Dow. What a git. Target hit on the Dow. Up, missed target, stopped out, hit target. Dow, you pain in the backside. Double-ended stop out on the NASDAQ. So that should take us into loss. Yep. Okay. So we should be able to take the initial inside bar breaks now. So we see how these inside bars work out today. Good test today. That's going to go down and hit target as well. So big whipsaw, NASDAQ. Interestingly, been doing testing on this version of the EA. All my testing on the NASDAQ is showing that it doesn't work anywhere near as well as the Dow and the DAX, which is interesting because the DAX has always been the #1 opening range breakout strategy. The Dow worked a lot more stable, but not as profitable as the NASDAQ with the original opening range breakout strategy. This one is proving really, really difficult to make profitable on this pre-market 5. And I think it's because of this. The opening volatility is just giving too many double-ended stop outs. So I've got to do a bit more testing with the NASDAQ. It's much more volatile. And obviously, as we know, the trailing stops. So that one there, the trailing stop triggered. Hit target. The only reason it's triggered the trailing stop, triggered a loss today was because of that trailing stop. We know that trailing stops make you make less money. So they do reduce the drawdown slightly though. So with prop, I'm more actually swaying towards screw the trailing stop. I'd want it to either make me the money or blow the account because I can take as many accounts as I like. But when it goes, I want it to go really fast and hard. So I've got my life. Yeah, interesting. S&P is just about to stop out by the looks of things. God, that's annoying. Never mind. Still running. 4 hour on first 4 hour EU, 4R on first 4 hour EU today. Brian, unless you can show me a positive backtest, you can keep telling me it's working, but long term, it will destroy it. It doesn't work long term, does it? You need to have a long term edge. Show me a backtest over a year of that making money. I can't do it. I can't make it make money. It doesn't work. You'll have to prove me wrong somehow, but I need proof that you can make that work long term because it sounds like a great strategy, but backtester doesn't work. We need to figure out a way to make it work. I can't get it profitable with any setting. Leo, afternoon. Gulam, GJ, we'll have a look at that in a sec. Burke, currently running ORB 150% of stop loss for TP with no trailing stops. Don't know what you mean by that. More a get in and manage. Well, yeah, but that's just discretionary trading, isn't it? That's flipping a coin and pressing a button and then managing something discretionary if it goes your way, which is fine, but it's not a backtestable long-term strategy, is it? Just discretionary trading, which is nothing wrong with that because discretionary trading works very well if you are a good discretionary trader. So Dow. Yeah. There's your target hit on the Dow, but didn't get it because it got stopped out of break even. So waiting for inside bar entries now. So NASDAQ, that is your opening range on the NASDAQ. S&P opening range is in. We are still short S&P though, so that could be the saving grace today. So Sorry, that's NASDAQ. Yeah, Dow just pulling back inside that opening range at the moment. So we'll see how these all go for inside bar recoveries. Big opening ranges today. There's your opening range. So the pre-market break is long. We will see. Pound yen, I wanted to look at. So pound yen's obviously coming down today. Pound is weak today. So, but we are just coming down into potential support here. So this area here, I'd be looking at support, that high, this high here. So this propulsion gap, which is also previous day's high. There, that line in that propulsion gap, potentially for a continuation bounce to the upside. There's no reason we should have strength on the yen at the moment. So, however, come Friday, when we get the policy rate and the Bank of Japan press conference, usually around somewhere between 3 to 5 a.m. UK, we may well get some movement on the yen. So hold your horses until then. But yeah, and it could go anywhere this week. Basically, this week we've got so much news. There's no point in giving any forecasts on anything. It's all going to be related to what happens with the news this week. So it will go where it goes. But at the moment, there's no entries on this. It's flat, has been for ages. Last entry on the pound yen was back here, which I got out of. Since then, no entries at all. Sideways. But yeah. Right, so let's just watch what happens with these inside bars. We've got 2 minutes left. So the Dow's not going to do one. S&P hit target. So TP1 hit on the S&P short. On its way to TP2. Potential inside bar forming on the NASDAQ. Dow completely retraced the open. Look. Tiny loss so far, but that S&P could well just recoup that lot. Very different movement. This is what I mean about this NASDAQ. I haven't run a test on the S&P yet, but the S&P's movement at the open is just so much neater, just like the Dow. I just get the feeling on the pre-market, I think this might not be the right instrument to run that on. I think with the NASDAQ, as we know, the 5-minute opening range break is a really, really good strategy on the Dow, on the NASDAQ. But that pre-market, I think that's just too volatile on that one to make it profitable, I think. So I'm going to run some tests on that one, running on the, well, I've got all the 5 and the pre-market 15 and the 5-minute. We've got all the set files and we know that one works. So I think I might continue to run that instead of running the pre-market on that. S&P's just stopped out on the trailer. So tiny loss. So we will be looking for inside bar breaks. So at the moment, we've got 20 seconds left. We will be taking one on the NASDAQ. So just pendings on highs and lows of that inside bar. And we'll see where we go on the second rally. There we go. So orders are in. That Dow's really gone, look. So it looks like the market wants to flip long. Well, the Dow's certainly flipped long. So new highs on the Dow. And that's really going for it, the Dow. So we may well get the other indices get dragged along with that today. So the S&P will get the initial 5-minute open break. And obviously we'll go along on the NASDAQ. If it does, obviously, wait and see what happens. Looking good. Morning, Kennelly. Afternoon, even. We'll have a look through the RSIs in a second. We just wait for these, see if these trigger. That gets us back into profit. There we go. S&P triggered long. Bit of slippage there, look. 2 orders placed, different levels, either side of the actual entry. Immediately pulled back. No entry on the NASDAQ. Ooh, just missed the stop there, look. Spread didn't trigger it. Trigger now, though. Okay, stopped out on the S&P. So wait for inside bar breaks on the S&P and see what goes on the NASDAQ. Right, I'll come back to those in a minute. Looks like the NASDAQ's going to trigger short. So it's going to be fair old whack to get that back today, because obviously we've got to do a 46-point move to the downside on the NASDAQ to actually get to 1.5 R. So 1.5 R, if you wanted to, if you took that down to there and closed all out, that would take you back into profit for the day. But we'll wait and see what happens. In a minute. Right, RSIs. So with the RSIs at the moment, we've got quite a few lit up, as you can see. The vast majority of these still Australian dollars. Aussie and New Zealand dollar punching up, is it? Yeah, so we're up at the highs on the Aussie New Zealand. So testing last week's high and the previous week's high. So we'll see what happens here. That's not previous week's high. What's that? Part of my fib, isn't it? Whoa. Yes, fib. I was going to say, where's that fib attached to? God, I can't even grab hold of it. Fib's gone. Right. So, yeah, that's last week's high. The line I've just deleted. We're just punching out of that high now. So we'll see if we get up to ADR, we get an immediate reaction off the top of that. See if we get some limit orders triggered. If not, then I suspect that's off. So we have to close out some loss on that. Off again. So this Aussie dollar, as you can see, Aussie dollar CAD still extended on the 4 hour, still pushing. No respite so far today. The day's not over yet, but that's tapping up into the 72 daily moving average at the moment. So if we're going to continue this downtrend, this is kind of last port for a pullback. Aussie dollar, Swiss franc's been massively weak today, so that's obviously rallied up. So I've got one order on that one at the moment, short. That's extended on the 4 hour and also extended on the hourly. So the first entry on that one this morning, so reverse alert was there. And then obviously since then we've just kind of rallied up ever so slightly. So putting in new highs basically. So next entry will be there, which is the same place as the previous one. But yeah, that's extended on the hourly as well. Just extended on the pretty much up to 80, near enough, on the Aussie Swiss. So big, strong rally on that one. We've had a profit take move on that. So push, accumulation, push. Did get a profit take on that. No profit take for the last, obviously, yes, Friday's move or so far today. So nice, getting nicely extended. 4 hour, already very extended. Aussie dollar yen. Big extension to the upside. Done some drawdown control on that one this morning. 3 positions on that on the hourly strategy. Again, no profit take whatsoever on this one. Embedded on the 4-hour. Huge extension above the 80, or was above the 80. It's just started to roll over now. So we just had some respite on that last 4-hour candle. We've got an inside bar gone in. So at the moment, we're painting an inside bar on an inside bar. We've still got 3 hours left on this candle, though, so plenty of time to go. But if we close bearish here, this may well be the start of a rollover on the Aussie. But looking at the Aussie New Zealand, obviously, this looks like New Zealand dollar weakness. This is New Zealand dollar coming down again. More New Zealand dollar weakness off the back of the interest rate rise. Market's just not loving the New Zealand dollar at all at the moment. And these little rallies we keep getting on the Aussie are not helping at all. But as you can see, Aussie's coming down against the US. It's coming down against the yen. It's not coming down against the Swiss because the Swiss is collapsing, but it's coming down against the Canadian dollar. So this movement we're seeing here is nothing to do with the Australian dollar. It's purely New Zealand dollar weakness driving it higher. So again, if we can get a little bit of respite on that New Zealand dollar, the Aussie isn't actually that strong, but at the moment rallying further. So Aussie US 4-hour RSI extension, that one's already extended. Your entry would have been up there, as you can see. That's the entry on the reversal alert, coming down very nicely. But obviously it's been extended for a while. So we're now, how many ADR is that? 68, we're so 71, 40, 280. This is pretty much 5 ADR. So all these Aussies, you know, somewhere between 4 to 6 ADR push on all these Aussies at the moment. So very ready for a pullback. Little flags is all we've had on these. So new flag breaks. So waiting for that profit take move to come in, but at the moment still waiting. Again, all news for this week. So just waiting for the news to kick in really. Hope that we get some decent strength on the other currencies. Euro odd extended on the 4-hour. So that's a nice big extension. Hourly also extended. Still, it's been extended and embedded since Friday. Multiple drawdown controls done on this one as well. Again, everything Australian dollar rallying. Euro has been very, very weak, although it is starting to show a little bit of strength, or at least not weakness. So target obviously somewhere up in that propulsion gap. So average on that one at the moment is sitting up at these highs, which is 150 ADR. So looking for a target up in this propulsion. Pound odd extended. Again, hourly RSI extension, 4-hour RSI extension. If you look at the buyer scorecard with the pound pairs, bit of a mixed bag at the moment, all kind of range bound. Pound bullish, Australian dollar kind of sideways. However, obviously the Aussies, they rallied the Aussie on the interest rates and they dumped the New Zealand on the interest rate rise. So again, you know, difficult to read into this, isn't it? If you look at the pound odd and the pound New Zealand, both showing as a -1. Australian dollar, huge strength. New Zealand dollar, huge weakness. Both of them got an interest rate rise the same way. So, you know, the market just not making any sense at the moment with these, with the fundamentals. We're kind of at these terminal rates where everything's starting to get a little bit odd. Gone long on inside bar on the NASDAQ. Look at this whipsaw today. Nasty market today at the open. So another long trigger on the NAS. So yeah, pound odd. Again, pound is bullish. We've just had news this morning. Ooh, blimey, what the hell's that? What's moving at the open? Oh, unusual activity. That's their stating the obvious indicator that Financial Juice have created. They got this new product called Unusual Activity, which shows you the change. Like, well, yeah, thanks for that. I can see that because there'll be a whacking great candle telling me that. So yeah, this morning we had Haskell telling us basically that further rate increases cannot be ruled out. We've had Bank of England saying that it's highly likely we're going to get 0.75 to 1% increases. So again, all bullish for the pound. ADR and US dollar Swiss, there you go. So there's the US dollar Swiss ADR we were missing on the Swiss franc ones. So again, pound bullish, Australian dollar sideways. So we should be looking at decent movement up on that one. As you can see, it's a big long trend at the moment, but this Australian dollar off the back of those rates really killing it at the minute. So nice big pullback will pop at some point. Euro Swiss 150 ADR. So that's just coming up to test the highs. So that's last week's high and previous week's high, which is that high there, which is the previous level of support. Yeah, so push back down into that propulsion at the moment for a good short 150. M5, wait for the reversal alert. It's not going to be too bad on that one. So you'd be looking at a half an ADR being roughly down into 97,310. So middle of that propulsion gap, basically. There's an option there for a short on the Euro Swiss. That's extended on the hourly now as well. We just had the hourlies in. No, not yet. Where was I? Pound odd, wasn't I? So that's nice extended to the downside. New Zealand dollar Swiss. There's the other one. Extended to the upside. So that's just starting to roll over as well. Not quite extended enough for me, that one, but so yeah, Euro Swiss is the only other one on the hourlies that is not extended on the 4 hourly. Everything else, obviously apart from New Zealand dollar Swiss, is all extended on the hourlies as well as the 4 hourlies. And obviously ADR is being hit across the board on the Swiss francs today. No real reason for this Swiss franc weakness. There's no news that I can see that should specifically affect the Swiss franc. So just weakness going into all the news this week. So first news to affect the Swissy will be the interest rates, isn't it? Yeah, on Thursday. So we got loads of news before Thursday when the interest rate comes out, and we're expecting that 4% rate rise for the euro. Pound US dollar collapsing. So got a short on that target. As you can see, is there in the middle of that propulsion gap. ADR, so that high. So looking for a TP there, coming down very nicely. But this pound really weak at the moment. But you can see how if you look at the pound New Zealand, see how weak the New Zealand is. The pound is weak, but it's rallying against the New Zealand. So shows you how weak that New Zealand is at the moment. So we are holding up at the highs on Aussie New Zealand at the minute. So this next hourly candle, next 2 to 3 hours on this are key. Want to see decent rejection up here and a push back down. Get some decent movement off that high, ideally. So we'll see what happens up there. Let me know if there's any other pairs you want to have a look at. Just want to watch the NAS. Oh, this is a chop fest today. Look at this. Good test for the inside bar recovery system. So we're long there. So the inside bar basically here. So that's the inside bar. Again, just whipped out the highs, pushing back down again. Literally since the open, all we've done is whipsaw today. No direction at all. Again, indices unlikely to have a lot of directional movement today because obviously we'll be waiting for the US dollar rates on Wednesday. So they won't want to pile a ton of money into any direction on sectors or stocks until they know what the value of the US dollar is going to be moving forward, whether that interest rate rise is coming. So looking like it wants to stop out, not quite. So we've gone absolutely nowhere. So since the open, so there's your opening range. So since the open, we have not even had a 5-minute ORB yet. So we are 30 minutes inside the opening range. Absolutely terrible on the NASDAQ. Dow pushed out to the upside, but still whipsawed down. Really didn't have a hope in hell today on any opening range breakout strategy. Whether you're using a trailer or not, it's been so whippy, you would have get taken out on pretty much everything today. So one of those days. See if we can recover it. 1100. So 17, still 16 grand up. I'll take it. Doing further back testing on the on this exact EA that's running here. All looking positive still. So all the DAX testing is all finished. So that's 1 year, 1,056 passes, 1,056 profitable. On the Dow, I think we've run 334 so far, all still profitable, as far as I know. $334 profitable, yeah. So pretty much the same results on the Dow and the DAX return-wise. So we're getting 4.83 down to kind of 2.74 in the top sort of 40 results. 5 down to 3 on the DAX. So results pretty stable across the DAX and the Dow. Just need to get this NASDAQ tested properly. And I'm going to test the S&P once I got all 4 of those done. Could start out of sample testing, which all looking good, hopefully. I might start some out of sample testing today, actually. Because I'm going to drop this other version of the strategy, which is not working at all. So the one that was published in that paper, can't get it profitable. Awful. So the instant entry one. So all that instant entry one is, for those who don't know, is you take the initial candle, first 5-minute candle at the open, whichever direction that is. So for example, the Dow today. So that's your opening candle. Yeah. So all you do is immediately, as soon as that candle closes, you go long because it's green. And that's a strategy. Really, really simple. Their paper shows 1,600% returned. I've tested for 6 and 12 months. I can't get anything profitable. Hardly anything. So give you an example, which I've just shown you there. So my strategy runs 1,000 variations with 1,000 positive results. This runs 30 variations, only 17 of them profitable, which means half of the strategy parameter permutations were not profitable, and the maximum is 2.36 return on drawdown. I can't make it work. I've double tested it to make sure I'm doing it right as the document. I am not profitable. So I don't know where they got their test data from, but I certainly can't make it work, put it that way. Anyway. God, what a chop fest. Anybody managed to make any money today on the indices? Pretty flat, isn't it? Horrible. Long entry looks like it's going to stop out. Mind you, it can't really make its mind up whether it wants to go long or short at the moment. So actually, this has got as much chance of getting back up there as it has of getting down there at the minute. Utter mess. On the plus side, all the time it's doing this, you've got more chance of inside bars forming, which means you've got more chance of breakouts happening. The tighter the inside bar, the more money we're going to make as well. So anybody got any other pairs they want to look at that we haven't looked at so far? Euro Swiss, there's your hourly. So Euro Swiss is now extended on the hourly to So there's the breakout actually on the Aussie New Zealand while we're looking at that. So there's your breakout on the Aussie New Zealand. Hey, look. Those two stop outs I had, it's actually managed to reach. So it's taken 2 days for price candles to actually catch up with where they actually stopped me out. So yeah, broke up on the upside. So if this is going to be a false breakout, we should expect an immediately break back down below that level and then start a push back down again. So we'll see how we get on here. Critical couple of hours coming up on the Aussie New Zealand. So Euro Swiss breakout to the upside 150 now on that one. RSI extended above 75. So we'll be getting in on the next 5-minute reversal alert, which is down there at the moment. So roughly 12 pips away, quarter of an ADR. So taking the next short on that 150. We're also up at the monthly highs there. Actually, that's 2 months ago low. Is what we're actually approaching there. Not a particularly great level, that one. So we broke down through it, smashed back up through it, fell short of it, smashed through it, bounced a bit. Not particularly great, but as a zone, very good. So these lows here, these highs here, so that whole area basically. If we're going to break down through that, that's potentially going to act as a resistance. However, should be getting some euro strength. So US indices lost the rent today. Yeah. Well, so far, the day's not over. It is not over until the fat lady sings, as they say. If you like opera. Not saying it's only fat ladies that sing opera, of course. Anybody can. Not really a lot to say today, is there? We're just waiting for the news. So everything's kind of stuck, indices including. Connections just come back. Okay, stopped out on one of those. Oh, look at that. Lost connection on this platform again. This is just bizarre. This just shows you the difference in servers. This server, completely frozen. Same broker, different server, absolutely no issues whatsoever. Really, really weird. There we go, it's back now. So immediately stopped out on both of those longs. Flip short, straight back the other way. I get the feeling this may be a $4.5 loss day, don't you? Can't trade on this. It's just not going to work today. So this is the time. So talking about discretionary trading earlier with Brian and the EA, the Euro strategy that he's testing. These are the days where you go, turn it off, walk away. So literally you're trying to trade through a chop fest. At some point, this is going to probably go. But if you carry on trading like this, literally all you're just going to do is hemorrhage 1%, 1%, 1%, 1%, 1%. You've no idea whether this range is going to last for 30 minutes, 3 hours, or what. So you run the risk basically of just trading through this today and just getting chopped to death over and over and over again. Of course, it may break and suddenly scream back down, in which case that's absolutely fine. If it doesn't, though, it's an account blower. So these are the days when you're going to, I was talking to someone in Telegram this morning about another version of the strategy they've seen somebody else trading, because this is not a new strategy. It's been going for years, opening range breakout. Someone else has been trading the strategy and trying to filter out these types of days using, there's lots of things you can use for filters, but my argument is there's no real way to filter out whether or not a 5 to 15 minute section of a day is going to be good or bad. It doesn't matter if you use previous ADRs, whether the market is in bull volatile, bull calm, whatever you want to use as a volatility filter, because the volatility here has got nothing to do with the volatility there. So these days you just have to accept them. There's no way of filtering out whether or not you're going to go range bound for 30 minutes at the open. There's just no way of predicting it. There's no historical indicator that can tell you whether or not the market is going to whipsaw. So you just have to take these days on the chin, unfortunately. However, saying that, obviously, if we get a 5R breakdown there, we get a 5R breakdown there, and we get an inside bar break there, just made 9 grand back, haven't we? So we're only sitting 2 down. So there's still a +7 on the cards if the market decides to actually pick a direction and go. Nothing you can do until it decides, unfortunately. So NASDAQ broken short, S&P still stuck at the Globex low, or the low from the London session. No one a DOW. Just whippy in it. Nasty. On rotation days like this, could the IB use less risk? You could do. But what do you class as a rotation day? How do you define a rotation day? This is just 30 minutes of chop. Doesn't mean it's going to rotate today. What could happen is this thing just goes bang, 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 bang for the next hour. That's not a rotation day. That's a trend day. We just had a choppy start. And the other problem with reducing risk, and again, there's people that teach this, which I don't agree with at all. If you've just stopped out for 1% risk per entry, and then you go, oh, it's not working very well, I'll reduce my risk. When you reduce your risk to half of it, for example, go down to 0.5% risk, that's the one that you're going to get, which is going to work. So all you're doing is you're making half as much money on the actual trade that works than the ones that didn't work. So reducing risk, all you're doing is reducing reward. So yes, you could go in with half the size after a set period of stop out. So you could say, for example, if we've stopped out 3 times in a row, reduce my risk by 50%. But then if this now breaks down to there and then drops down to a 5R return, you're not making back that loss, are you? There is never a right and never a wrong way of doing it. You can't. This is the whole thing, as I keep saying. You can't predict the future. So how can you adjust your risks based on what's going to happen in the future when you don't know what that's going to be? You can adjust your risk based on what's happened in the past, but I wouldn't necessarily reduce it, because if this gets down to here now, yeah, so we've lost what? What have we lost on the NASDAQ? So 230. That's a full loss. So 1230. 2,300. 2,200-ish. If it moves down to here, that's $1,500 right now. Yeah, we're down 2,300 at the moment. So getting down to there, which is basically 2 candles from where we are now, potentially, is taking our loss down to -700. If it pushes down to here, that's break even. If you take half the risk, pushing down to here doesn't get you anywhere near break even, does it? Doesn't help. I've seen lots of courses in the past say, and in fact, one of the courses I got taught in stock trading was, if you have 3 losing days in a row, take a step back, reduce your risk. It's like, well, if I've had 3 losing days in a row, How's it going to make me feel if I reduce my risk and then have a storming day, which only makes back a third of what I lost because I reduced my risk? Counterintuitive, isn't it? Doesn't help, I don't think, anyway. Stuck on the S&P and the Dow. Brakes are on. Okay, got Christmas trees on the Aussie New Zealand at the moment. Anybody got any other pairs they want to have a look at, or anything else they want to discuss? Any other instruments they want to look at? Nobody's mentioned it for a few days, so I'll do it myself. Nobody's mentioned gold for ages. Big, strong push on the US dollar. So gold's coming down. We are completely stuck in a range on gold and have been now since here. So we're stuck bang in the middle of nowhere at the minute. So we're waiting for FOMC. On Wednesday, we'll get a breakout of this zone, I should imagine. So either way, when we get a move, I think this week, I get the feeling that this will be the week that the market decides on the US dollar. So whether it be bullish or bearish, more likely bearish, I think we'll get some considerable movement starting on the US dollar, because if they don't increase the interest rates, which they're not going to, I don't think, they're going to keep it at that 5.25. Yeah, so that's the forecast, to remain where we are at 5.25. If we get that, obviously we're going to see a rally potentially start in gold. So looking at trend-wise on gold, obviously we are in an uptrend at the moment and we're pulling back. So I think that's potentially the continuation move moving forward. However, there is a chance that we're just going to go like that because the market isn't going to make a decision on US dollar as well. So the only thing I can see from the US dollar is either that or that, really. Sorry, as far as gold's concerned, that or that. So bearish US dollar or neutral US dollar, because the market's not quite sure yet. So key this week is going to be the press conference. That's when we're going to find out what is happening with the US dollar over the next month to 3 months. So the forward guidance will get given out in the press conference. So that's where we're going to see that movement happening in gold, and potentially not going to be looking good for US. So we will see. And obviously with oil prices coming down as they are, there we go. So we're nearly there on oil. So nearly there at support. Good looking buy that. Potentially could be back up there in the next sort of 3 to 4 days, especially if we get some movement on the US dollar. Brian, glutton for punishment. Oh, you're talking about the indices. The indices are certainly a glutton for punishment today. So just absolutely not enough sellers, not enough buyers. Looks more bullish than bearish to me at the minute. Dow's holding up at the open. Got nothing but rejection candles going in on the NASDAQ and the S&P. It looks bullish, but you'd think if there was enough bulls, they would have gone by now. So I think today, cut your losses. Big Les, 3 losing days. Yes, short-term backing off will hurt next winning trade, but save you later on in the big picture. Well, I have to disagree with you, Big Les, because you'll never get your money back if you back off, will you? How can it help you in the big picture if you suddenly reduce your risk and start making loads of wins? As soon as you up your risk again, you're going to hit a losing streak. Got to keep. This is why backtesting is so key when you're backtesting, to use a fixed risk and never use a percentage risk, because a percentage risk as a variable has a big chance of being impacted by a bear run in your P&L. So if you use 1% risk per trade, and your first trade is 1,000, and you make 7,000, for example, on your first trade, you're not now risking that, are you? You're risking 1,700 on the next trade. So if you suddenly have a losing run, that losing run goes down as fast as it goes up. If you reduce your risk as you have a losing run, it's very difficult to get that money back. So you have to use a fixed risk every single time you take a trade. That gives you a constant through your testing and through your trading in general. Yeah. So imagine, like I said, if that hits there, when do you put your risk up? So if you were to reduce your risk after 3 days of losing to 50% of your initial one, and then you had 2 winning days, you would never get back what you lost, which you'd have to accept. So which day do you then go back up to your normal risk? And then psychologically, what happens to you when that day is a down day? What do you do then? Double it? Go martingale? Gamble? Much better off to stick with the same risk all the time. Give yourself the chance of getting the money back. If you have a strategy, for example, that has a 5R, right, as a return, if you go long with half the risk, you've actually got to get a 10R on that trade to get back what you lost. You've got to go twice the distance. Think about ADR. Yeah. So if you've got something where you're targeting 1 ADR and you take half the risk on it, you've got to get to 2 ADR. It's a lot more difficult to get to 2 ADR without that happening, isn't it? Than it is to get to 1 ADR. Exactly the same principle on any strategy on any time frame. I've got a test actually here. Not this one, the other one. I think this is the one. Let me just run it and see. So this is the ORB instant strategy, which I've been back testing, obviously. Right, so that's a stop out. Didn't go anywhere. Right, there you go. Look at that. So we haven't taken profit on this yet, but risk reward on it. I'm not going to have enough. Not going to have enough. So that's 7R. 8, 9, 10. So that's roughly 10R. Yeah. Imagine reducing your risk on the day that happened. You'd be absolutely livid. Yeah. But bang. Immediately up to 107 grand profit. That was an immediate stop out, that one. Then it went. See, ORB strategy, continuous mode re-entry, happy days. The original one. Or inside bar, you'd have had an inside bar in there somewhere. Stop out again, rotation. Stop out. See what I mean? This, there you go. So there's stop out. How annoying is that? That was a 5 or 6R. Stopped out. Their paper, I'm not convinced at all. I can't make this profitable at all, this version of the strategy. Doesn't seem to work in any shape or form in any testing I've done. Opening range breakout strategy there. Yeah, you had a double-ended stop out, but my God, did you make your money back? Look at that entry there. Yeah. Stop out, stop out. pause, wait, inside bar, break. You know what I mean? It's just their version of it. I just cannot get profitable. I don't know if anybody else has built anything to test it, but I can't make it work. It has its good runs, look. So that's that 1, 2, 3, 4, 5, 6 losing trades on the trot, 1 winner. But the 1 winner, look, makes back virtually all of those 6 loses. Again, if you'd have halved your risk, you'd have made back nowhere near that, would you? Got to be in it when you get the winners. That's the whole point of breakout and trend-based strategies. Again, loser, loser, winner. Nope, loser, sorry. Doesn't work. This is why you can't believe everything you read. You have to test it, verify it. Check it yourself. 9 times out of 10. You know, everybody can tell a good story, but proof's in the pudding. And I don't like the taste of this one at all. Yeah, stops out all the time. This is running on the NASDAQ, obviously, which was their test bed. I haven't run it on anything else yet. Yeah, you get the odd winner, look, which is great. There's an outlier. Huge outlier. 7 grand profit. So that was a 7R. Again, look, brings it back up. So we're now back into profit, but 1, 2, 3, 4, 5, 6. I mean, the strike rate on this thing is going to be like 5%. It's terrible. Like I said, I can't make it work. NASDAQ, back up break even. What a chop fest. Okay, so we've got inside bar break going on S&P. Just as NASDAQ's pulled up. So potential for loss recovery there. Risk based on your stats, not next trade, not instant satisfaction. Risk based on your stats. Try it. Hey, Glez, show me a back test. If you can show me a back test that makes that work, I'm happy to look at it. I only work on stuff I can test, really, because all the theories I've tried, don't forget, I've been around a long time. I've tried everything. I've read every book. Not every book. Not every book. I can't read books at all. I've watched every video. I've tried everything. Literally tried everything. There's nothing that predicts the future, and there's no loss recovery model that adjusts risk that works apart from incremental scaling in positions. That works. But everything else just doesn't work because you need to have that stability in a strategy to give it an edge. If you change the risk parameters over and over and over again, the edge just vanishes because the edge is dependent on when you change the risk parameters. When you change the risk parameters in the past, they won't be the change in the future. So what you're doing is you're adjusting past results to make them favorable, which will never occur again. So therefore, adjusting your risk parameters based on past hit and miss of strike rate cannot be replicated. Stopped out on the NASDAQ. This is definitely a definitely looking like a losing day. What about testing it on certain days of the week? I only Wednesday and Thursday. Colonel, why do you think that the market only buys and sells stocks on Wednesdays and Thursdays? So there's no pattern to market movement on days of the week. There is sometimes, but then others there isn't. Yeah, again, it's random. So if you can find a pattern where in 1 year, Mondays were more profitable if you press the long button, replicate that in a different year and see if you get the same results. If you can get that 2 years in a row and then replicate it over a different 2-year period to get the same thing, you've got an edge. If you haven't, you haven't. Again, days of week testing. When you've got a big enough sample of data, day of week can help you if you can replicate it out of samples. So, for example, if you do I haven't got a strategy with any data I can show you, but if you can get a day of the week, so for example, Wednesdays always makes more profit on a Wednesday, whatever strategy you're trading. If you can replicate that 10 years in a row out of a year's worth of data that you've got, then yes, there may be an edge there. But the edge has got to be significant. If it gives you an extra 1% a year, if you were to just trade on Wednesdays and scrap the Tuesdays and the Thursdays, for example, what happens when you have a 10 to 1 hour day on a Thursday and you miss it? Again, doesn't work. You're trading something which is random, driven by fundamentals or driven by company stock pricing. The day of the week doesn't impact when these guys make their moves. These guys make their moves when their books tell them to make their moves. Oftentimes these research publications are released for promotional purposes more than anything else. Yeah, exactly. That's what I think that one is. I haven't even looked at this company. I don't even know who they are. Peak Capital Trading. I should have looked at this first, shouldn't I, really? It's them. Yeah, same logo, isn't it? Mentoring Bootcamp. Oh, right. So they're an education company, basically. Training. Never heard of them. Yeah. Like you say, marketing material by the looks of things, isn't it? Doesn't work. Push that gold up my trusty whippets, making the rent back. Ah, gold. You're long on gold, are you? Right. Oil at the lows. Okay, so we've got an ADR hit on oil. And this is the weekly, monthly low. So very, very good support. We've honored it every time we've been here so far. We had a little push through and rejection. So this was a price discovery, which failed. So everybody and their wife will be watching, or husband, will be watching this level for longs. So as soon as we start to get some buy pressure down at this level, we're likely to see a load of bulls come in. So drop down, probably M5, to be honest. You're going to get a very tight entry on M5, look. It'll either go or it won't. If it doesn't go, it doesn't go. But if it does go, you'll probably find you're going to get a very decent push off of that very quickly. ADR on the pound US dollar as well. Very strong US dollar today. A lot of movement today. Was not expecting a lot of movement today ahead of the news we've got this week. But yeah, US dollar CAD, big rally on that one. Pound US dollar, obviously big drop. We got weak pound today. TP'd on that pound US dollar as well. So that was the entry from Thursday last week. Let's just hit TP and propulsion at support. So yeah, it looks good. Big US dollar movement today. Look at this. Lovely. Euro US dollar, I should imagine, coming down hard as well, which means gold will be flying through the floor. So again, watch this. This is more of a V-shaped recovery. So I'll be watching this low here. 125 ADR today. If we can get down to there on gold, be watching that for a buy. That'd be a good spot to buy out of. And drop down, wait for the reverse alert, wait for some signs of strength to come through. Something's got to pay the rent today, isn't it? Certainly not the indices. Look at this. So NASDAQ, one big candle. Dow, no movement. S&P, no movement. Look at that for a range. We're 1 hour in. So S&P opened there. literally we've moved down 2 points. Dead today. Why not use ADR for specific days? How do you mean use ADR for specific days? For what? So this test, this paper, yeah, the test that I've just run and showed you here is using ADR as a stop loss value. So their tests were initially conducted with the stop being underneath the low. Yeah. So there's your opening candle. There's your initial cash balance. Hit the long button, stop under the low. Yeah, it's interesting. In both of these cases, they show an instance where it would have not worked, interestingly. So that was their initial testing. Then they did further testing using ADR. Yeah. So this is using a percentage of the daily ATR or ADR, same thing. And that's what I've been using, is that, because it's more effective. The ADR stop gives you a dynamic stop based on current movement. So obviously the ADR and ATR changes when you're in a bull, calm, bull volatile, bear volatile market. So using ADR is much more reliable because you're not using a fixed pip, which will be radically different as time moves on. So for back testing, ADR is always a better measurement. That's what I was using in the test. Can't make it work. So yeah. So the only with opening ranges, the only real stop losses, the only thing you can really use as a target or a stop is either ADR, use a measurement of what it's doing on average daily, or use the initial opening range, because there's only two measurements of volatility you've got. What's the current volatility over the last 10 days, 14 days, whatever, or what's the current volatility right now, today, when we're opening? Those are the only two real things you can use as a dynamic variable, because anything else is just plucking numbers out the air, and it's not related to anything instrument specific. Last 20 Mondays, ADR will be different to the last 20 Fridays. Why? How's that relevant? How's last Monday's ADR got anything to do with anything? Same, isn't it? Yes, it will be different. Yeah, because you're never going to get the same movement on 2 days. If you take the last 20 Mondays ADR and compare that to the previous 20 Mondays ADR, they're going to be different. It's always going to be different, isn't it? That's why it's a measurement of volatility right now. Last 20 Mondays ADR, if you think about what you're saying, last 20 Mondays ADR is going back half a year. What the hell has half a year's worth of data got to do with today? Nothing. Imagine being 6 months after COVID and looking at the ADR from 20 days away and taking that as part of an average measurement for what you should do today, when COVID was making the market go like that, and today we're going like that. Totally useless data. Doesn't make any difference at all. Got to use relevant. Got to use now. Yeah. Look at ATR on your chart on the daily. Yeah. If you were trading here using the last 20 days worth of data, you were trading here using the last 20 Mondays worth of data, you would be including ATR readings here when the market was trading down there. Your figures here are going to be like taking into account what happened during COVID. Absolutely useless. What has that got to do with where the market volatility is today? Absolutely nothing. Make any difference. We're looking at what's going on at the moment. What's happened in the last 2 weeks? Are we moving into a different market regime or not? Market regime determines volatility. Post-COVID regime, pre-COVID regime. cannot be used today. Whatever worked there does not work now. If you developed a system and a strategy there, unlucky, as soon as you got to that point in time, your system and strategy failed and you had to restart from day one of your whatever you developed that strategy from. Because unless you're using ADR, that and that are chalk and cheese, black and white, totally different things. Can't use them together. So you can use ADR, definitely, 100%, but you can't go back using 20 weeks worth because that's half a year. It doesn't matter what happened 6 months ago, does it? Oil is very sharp falling knife. Keep hands well clear. Or it's a very sharp falling knife which is about to bounce on a massive trampoline, handle first and fly back up. Flip a coin. One of those two things is going to happen. I can guarantee it. Whatever you do, if you're going to try and catch the falling knife and hope that the trampoline is there, make sure you use a stop loss, because at the moment, I have no faith in oil whatsoever. However, look here and look at the bounce of the trampoline. Look here. Look at the bounce of the trampoline. Look here. Look at the bounce. Look here. I've got 4 points of data here, and 3 of them tell me that it's going to bounce. I haven't got any that tell me it's going to go through this line. You want odds? That's it. That's it. 50-50 shot every time you take a trade. It's going to do one thing or the other. Just make sure your risk reward is positive. Right, so S&P having another crack at breaking out the lows. Dow, we are short. NASDAQ rallying long. Literally, you could. It's like going up to a junction and having an arrow say turn left, turn right, and go straight ahead at the moment. This thing's got absolutely no idea. Get in, hope it goes your way. Free petrol. It is pretty much at the moment. No, I don't care because I've got an electric car. What I want is free electricity. Petrol doesn't concern me anymore. I haven't been to a petrol station for years. Literally for years. I've had my electric car now for 2 years, 2.5 years. Before that, I was hybrid. So petrol stations and I, we don't really get involved anymore. Right, so market's breaking. Whoops, market's breaking to the downside at the moment across the board. So S&P, fairly nice, quick, easy target there, 7 points. Dow, again, nice, quick, easy target. It's really easy, really quick hits these. So Dow's coming down to Globex lows. That's actually Globex low, but I mean, oh no, sorry, no, it's not. That's the open. This is Globex lows. We're just coming down to test on the Dow. S&P, same thing. That's Globex low. Just rejected it. Look, they bought it. So see if we can get through that. If we get through there, you've got the gap fill and then retest to those lows. So that target's on the cards to hit to the downside if it gets there. But at the moment, struggling in it. All those bounces on oil started with a break inside the previous candle. I don't know what that means. What do you mean by that? You have to understand, the reason price moves is because of limit orders in the market. Yeah. So when you get here, you will get a wick. Because limit orders will trigger and drive price back in the other direction. So it's down to basically whether or not there's limit orders here, which we'll find out. If this slams through there and closes below, then yeah, look out below. However, if this wicks off of these lows, that means the buyers have triggered limit orders and are not letting price through. Price discovery will fail. And then we'll try a bull run to see if we can do a price discovery outside the recent highs. One of those will work. That's what a breakout is. So just a case of watching here, wait for the reversal alert, wait for the market structure to shift. If the market structure shifts back to the upside in the next hour or two on the 15-minute chart, you know you've got the limit orders triggered. If the limit orders are triggered, it's highly likely the buyers will add back into those positions. And that's why you get your W pattern reversals. However, it might just collapse straight through. Look at how it's come off the monthly. Look, it's bounced off the monthly. We've tried to push through. The buyers have brought it up again. So if this keeps pushing down and we keep seeing wicks forming, yeah, it means that the limit orders are triggering. Every time the sellers hit the bid, the buyers buy it. And eventually the sellers will go, we ain't getting through. They will puke and it will drive back the other way. Or the buyers will get overrun because there's not enough limit orders sitting there. And this price action is because they really want oil down. And if that's the case, it will go down. But nothing you can do. Target hit on the Dow. So there's one TP back. S&P can't get through. This is just, look, we've got inside bar. Look. Inside bar has just formed on the NASDAQ. Chop fest, isn't it? Look. So if this breaks to the downside, happy days. I think we've probably got a run starting. If we can get movement down on the NASDAQ, that will drive down the S&P. And obviously, it could be that the Dow's dragging both of these with it. So if we get a break to the upside here, I wouldn't trust it. See what happens. Markets platform's just frozen up again. There we go. Think about it. What's come with the ADR package you've purchased? I'm not sure what you mean, Mick. So of my indicators, there's two. There's the ADR indicator, Euro Pound 150 ADR, US dollar CAD's just hit ADR. So I got out of Euro Pound earlier. Look, oh, wait. So that was the reversal alert on Friday. I got out of Euro Pound way too early today. US dollar CAD, we've just had ADR hit there. So that's back into profit now, targeting that propulsion gap. I'm targeting that second propulsion. This one I think is pretty much done. Obviously, that is the ultimate target up there, but I'm looking for an exit there. So the ADR, you've got the ADR reversal indicator, which is this. I can't operate a computer today. So the ADR reversal indicator is what draws these lines on the chart, yeah, and shows you the ADR extensions, average daily range extensions. And the indicator will do alerts for you on the pair that you've got it on. So if you set this to do pop-up alerts, email alerts, push alerts, it will alert you at whichever ADR levels you select, yeah? Then you've got the ADR dashboard, which is this one. The ADR dash basically monitors what ADR is across multiple instruments. So this will just light up to show you the ADR levels. It won't draw anything on the chart. So this is a visual aid. So you can see where the ADR levels, see where the extensions fall. This is an alert dashboard, which will just basically pop up alerts every time you get a level of ADR hit. And again, you can select what you want. Oops. So in the inputs, you can select obviously what instruments you want, but you can select which ADRs you want hit. Yep, so only tell me when we get to 150 ADR, for example. And the ADR dash also gives you the weeklies. Clicking and dragging stuff around. Gives you the weeklies and the monthlies. So this shows you when an instrument hits its weekly range. So talking earlier about days of the week don't matter. Days of the week do matter if you get something hits its weekly range on a Tuesday. Yeah, there's a reason for that. So if you look at an instrument and it lights up its weekly range, its average weekly range for the last 10 weeks, and it does that within 2 or 3 days, and there's no news event, it's likely that's just a market push which is going to have a profit take. So you can play the weekly reversals. and monthlies, if you get the monthly ranges hit within 2-3 weeks of the month, there's a good chance they're not going to get much further, because on average, that's what they usually move in a month. So just because something hits ADR, though, does not mean it's going to reverse. Yeah. So you look at this US dollar CAD. Yeah, we've hit ADR. We've come off it. Perfect. Yeah, because this is what it normally does on a day. Yeah, this is the average range this thing does in a day. So if you've hit what it average does in a day, the likelihood is it's not going to be able to push much further. However, it doesn't mean it's going to go down. It could just go straight into an accumulation and then push tomorrow. It could also retrace. Don't know. But what it's designed to do is just show you what on average this instrument does every day. So you can see if you've got a target, for example, like I have here on the US dollar CAD, I've got 3 long positions. Well, there's a double here, but my average price is here. So I could get out right now at a break even and say, this trade didn't work. I've been in it for a week. It's just not worked. I could get out of it. The fact that it's hit its average daily range means it's going to be a lot harder for it to move further, because the market's got to drive a lot further than it normally does to push beyond that level. They've pushed a hard move today. For people to be able to continue to buy, we need more sellers. If people are still trying to sell this thing after being run over like this, they're probably going to stop, which means you tend to have a pullback. I am targeting here, which on the hourly chart is a propulsion gap. So I can say that's 150 ADR away. So I'm not expecting to hit this target today. So it helps you visualize, when am I going to likely get to my target as well? I'm not going to get there today, because the chances of it going beyond 150 ADR are 12%. So it's unlikely we'll get there today. There's a 1 in 10 chance it might, but not likely. So what I am expecting is a pullback and then another leg up. I may get there tomorrow or the day after, but I reckon I could get there by Wednesday if we get some US dollar strength, because Wednesday is FOMC and I want to be out by then. So there's lots and lots of uses for ADR. You can use it for targeting. You can use it for entries. You can use it literally just to plot out where am I going to go, and use it as a timing guide. There's all sorts of stuff. But the dashboard is basically what I use every day. This is my alert system. These dashboards, this one, the ADR and the RSI dash, are what I call market condition indicators. So the condition of the US dollar CAD at the moment is extended beyond ADR, or at ADR. On the hourly, the US dollar CAD is not extended at all. So the RSI condition is flat. Yeah, I'm only interested when we get here and here. Yeah, there. Look, short, short, out. Long, long, out. Long, 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 off of there, still in it at break even. Yeah, up there, short, short, out. Yeah, so this RSI dash alerts me to conditions where the hourly and 4-hourly RSI get extended beyond their normal ranges. And that's what ADR does. But ADR is just more of an intraday signal than RSI, which is a swing signal. So ideally, these you'll be in and out, the same, what's taught in the bootcamp going along the bottom. Ideally, you'll be in and out of these same day or next day with RSIs as well, as you saw today, euro pound. Yeah, there was your signal, which the RSI dash would have given you on Friday. There was your entry, which the market reversal alert indicator would have signaled you to get into. There's your exit. Absolutely spot on, perfect trade. That's not what normally happens. Normally you need 2 or 3. But you get instances like the Aussie New Zealand where it just doesn't work because the market goes into a squeeze condition and you're in it still. Nothing's infallible, but that's what they do. But go and have a look on the website. Everything you need is on the website. There's all the education's there. The EAs, the indicators, every indicator's got a detailed video, manual, everything. So just spend some time on the site. Pick what you think you like. Oh my God. Short stop out on the S&P, NASDAQ, flip long. This is just I feel like Mike Myers has entered the building and had a good old chop fest today. So short on the Dow, we got 1 TP, very small loss going to go in on the second position on that. But again, look at this chop fest. Look at this. We're now nearly an hour and a half into the session. That's your range of movement. Yeah. So again, ADR, give you a good example. What does this pair normally do in a day? On average, that is the movement of the S&P 500 on an average day in an average New York session. That's today. What on earth can you do with that? And before somebody says sell the highs and buy the lows, good luck with that. By the time you've got a signal to go long, you're already at the high. This thing's a nightmare. Terrible. You're supposed to say keys to the Lambo. Yep. I think the Lambo's well and truly backfiring today. We're only down 2.6 though. I mean, we're down 2.8% on 3 instruments on a chop fest like this. I call that a result. The vast majority of people will be martingalled up blowing their accounts by now, trying to get an entry on this thing. Still got, the day's not over. Be interesting. We'll come back tomorrow morning and we'll find out how this did. So by the end of the day, we could be back at break even. We could be back in profit, couldn't we? You never know. I'm more interested in your system at the moment, Brian, on trading the euro US dollar, because that thing seems to be moving a lot more beneficially than the indices. 175 euro Swiss. Again, just talking about the so gone short euro Swiss, M5 reversal alert. It's just invalidated the signal. So your entry signal was there. We've literally gone straight away, 15 minutes straight up, invalidated that entry. So your next reversal alert, pretty much the same spot. So yeah, just talk about ADR. So these percentages, it's all explained in the video on the website about the percentages, but the percentages basically are the number of times per year on average that the market extends beyond these levels. So when you're looking at ADR 10, only 6% of the year will it extend beyond 175% of its average daily range. Yeah, only 3% of the year will it go beyond 200. As you get to 225 ADR, the odds of it going further get so small it's not worth reporting. So that's why we stop at 225. 250 is like 1 point something. 275 is 0 point something, but basically if you get beyond 225, there's something wrong. Something's gone fundamentally wrong with the instrument. Which brings me to the point, what? Because there's absolutely no news on the Swiss franc today. So just scaling out the Swissy. I suspect this is profit take moves, getting out the Swiss franc, ready to pile money into this week's news. Freeing up currency, basically. Bank of England's man is speaking at the moment. Inflation is moderate. Nothing exciting in there. Nothing red. Yeah, so Brian's euro US dollar strategy, your entry today would have been, so you'd have gone short there and you'd have gone long there. So short stopped out either for a break even or depending whether you're using some kind of trading stop, obviously discretionary. Long, nice push up into yesterday's high and last week's high, dotted line and the solid line and the monthly line. So beautiful. Look at that. Yeah. I say it in every day. Nothing works but support and resistance. What have we got there? Confluence. Yesterday's high, last week's high, last month's. Yeah, 3 levels. What did price do? Limit order triggers. So banks and institutions have limit orders placed at highs and lows of days, weeks, and months. When you get to those levels, limit orders trigger. That is a limit order trigger. So made a fortune on that. This is why I can't understand why this doesn't work, Brian. Every time you show me this and every time I look at this, it looks like, well, yeah, you went short, you stopped out, that's fine, but you got a 3-4R back. How can you not make money? How does the... I'm going to have to retest it. I can't see how it doesn't work. Every day this week, look. There's Fridays, break short, lovely. Obviously, you know that works the day before on Thursday. So last 3 days, this thing's done nothing but 5 hours, isn't it? But it's obviously come straight back to break even. So hopefully you took profit at the highs. But yeah, I don't know. I need to test this more thoroughly, obviously. But days like this, I mean, see, this is the Asian chop fest that worries me about this strategy. Look. So you had a long break, stopped out, but then the short break milked it. You had a break short, break long, double stop out. Break long, stop out, break short one. Break short. And that was 1.5R, 2R. That obviously made like 900R. Short, stop out, long. Short, never look back. I mean, you look at that last week, it's absolutely beautiful. Run that strategy over a year. It doesn't work. This is what it does. I need to watch this visually. I need to put it in the back tester and visually, I think, eyeball this to see what it's doing. Because there's got to be a way of making money out of these breaks. I'm not sure, to be honest, Brian, Euro US dollar is actually the best instrument to do it on because you're trading a European pair against a US pair. If you tried this with an Australasian pair against a European pair, so something like odd CAD, for example, you're getting all that Australian. Actually, no. Because what you want is actually a quiet Asian period, don't you? Needs testing. Needs more input. Just tapped 1R on the short. Close manually on the high. Chop fests are suicide, I'm finding in the back testing. Yeah. And this is the problem. This is the problem with all breakout strategies. Yeah. So there you go. Look. Longs stopped out. Very small loss, but a loss. Yeah. Stopped out. Short opportunity to get in. We've got an inside bar break ready to go on the S&P. We are already short on the Dow. Tiny risk. But this is the problem with every single breakout and every single trend strategy. The strike rate is 20 to 30%. You can't get away from that fact. The market spends 80% of its time in mean reversion. Therefore, you are only going to get a 20 to 30% strike rate on a breakout strategy. Because if mean reversion works 80% of the time, it means that 80% of breakouts fail, which we know. So when you're trying to trade a breakout strategy, it's highly likely it won't work. Because that's the whole point of balance, price discovery, balance, price discovery, balance. In every area of balance, you have an unlimited number of false breakouts before the price discovery leg starts. So in here, you might have 10 false breakouts. You get one there and you get one entry there. This is the problem with breakout strategies. However, when they go, you're looking at 10R plus a lot of the time, aren't you? Which is why I'm finding the opening range breakout strategy such a pain in the backside to actually watch, because it's painful watching it. However, we know, I'm not being funny, but this is the same EA backtest on the Dow producing $86,000 in a year, and on the DAX producing $86,000 in a year with 10% drawdown. We know it works long term, but you got to sit and watch it. And I think that's the problem with your Euro one as well. You're going to have the same problem. Shopfest is just going to drive you nuts. So you got to put it on an account and not watch it. Dow stopped out, tiny loss. We're just about to flip short on the NASDAQ as we are flipping long on the S&P. These two tell the story, don't they? Every time this flips short, this flips long. Every time this flips short, vice versa. Yeah. These two move in sync 90% of the time. So when that goes that way, that goes that way, that goes that way, that goes that way. Today, all they're doing is taking the opposite signals to each other. Really good test of the EA and the strategy to see if it can get itself out of here. Because if it can dig itself out of today, it can dig itself out of everything. Honestly, we need one break, one 5-hour break. Everything's done. Just waiting. Let's see. Right. That's all I've got for you today, really, because I think you're going to find we are going to mean revert on virtually everything today. These ADRs. Aussie dollar Swiss, so Swiss franc still pushing. So first short on that. TP, I'll be looking at that high. Obviously, big propulsion gap targets to the downside, but Australian dollar, do not want to get too excited. Get out as fast as you can with the Aussies. Things on a whirlwind ride at the minute. Right. We'll update on this tomorrow. Be interesting to see how this fares for the rest of the day. So it's going to trade inside bar breaks until US close. I've got it set up. So on a normal day, I would be stopping at -4.5. Obviously, the idea being it stays within prop evaluation limits. However, this is set to go all hell breaks loose, basically. So it's just going to carry on going until the end of the day. It either gets itself into profit or I want to see what it managed to generate as loss. So this is all part of the testing. I just want to make sure that the trade functionality is all as expected. And I'm looking at slippage and that sort of stuff. That's why I'm running it. So we'll see how this gets on tomorrow. But yeah, I mean, look at that. All we need is like a bang, 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 $3,200. Completely got rid of all that loss. One trade. That's all we want. One trade that actually breaks on one instrument. Doesn't matter which. If it breaks on two at the same time, double bubble. But that's all we're looking for. Literally the market just to stop mucking about and pick a direction. Right now, it's a tool for me to get in while I can't be at the chart, managing once I get in for London. Yeah, it's a good way to do it. If you're going to manually trade it, then yeah, I mean, this is the whole point of the position trading with the opening range breakout EA. I built that so that I don't have to sit there and wait for the reversals. I can just put the EA on and just say, just keep getting me in if this thing pushes and wait for that pullback. So it's there to make my life easier. I'm still eyeballing everything, which is good. That's exactly what you should be using it for. And if you're using the opening range breakout EA to take those, it'll do exactly what you want it to, won't it? I would just try and test some different currencies with it because I think you might be on the wrong currency. Aussie dollar CAD has always been a favorite of people that trade Asian range breakouts because in the Aussie CAD, you quite often get quite a tight range, which means obviously tighter stops and less distance during the London session to actually make money. So it might be worth testing different instruments with that strategy. This one, for example, look. London Open. Yeah, you get the big moves out of the London Open on Aussie pairs a lot of the time. 125 US dollar Swiss. Swiss franc still getting absolutely caned. That's coming up to really nice resistance. So you've got two resistance levels, US dollar CAD. Last week's high and previous day's high, followed by last month's high at 200 ADR. So nicely extended. We're extended on the hourly now as well. Propulsion gap filled. Propulsion gap target at weekly high. So if this thing can touch into previous day's high, which was also that Wednesday high, look. Yeah, pushed up, double topped it. Yeah, going to be limit orders there, which drove that down. bearish. Good looking short. But you want to be out of that by Wednesday. So again, M5, drop down, reverse alert's about to trigger there. That means the bears are on side. Jump in. Confluence on that. Right now, running a test for all 3 sessions. First 4 hour, 30 before London, 30 before US. Trouble with that is, what is London and what is US? If you look at FX pairs at the New York Open and the London Open, the London Open varies every day on FX. Obviously, we know Frankfurt opens at 8 o'clock, but it doesn't always go at 8 o'clock. Sometimes it goes at 7 o'clock. Sometimes it goes at 9:30 on FX pairs. Indices fine, but on FX pairs, the time the market moves varies. So it's difficult to pick. I would stay in 4-hour blocks if I were you. First 4 hour, second 4 hour of Asia. Because then you get to 8 o'clock, you get to Frankfurt. You know you're going to get some movement there, don't you? Difficult with FX pairs because there's no actual open, because it's 24/5 trading. At least with the indices, we know that they open at a specific time of day. So, oops. So there's your DAX open today. Or there's your Frankfurt open. The market decided to sit sideways for half an hour before they decided to move the FX. So 8:30 that went there. Day before, there's your London Open. Or there's 8 o'clock Frankfurt. We moved down a little bit, did nothing. Came back up again. New York opened. It decided to go in New York. Forgot about London that day. Let's look at the Frankfurt Open that day. So you let half an hour, 8:30. More often than not is more like when they decide to move. So if you picked maybe the 8 to 8:30 time frame, or the 7:30 to 8:30 time frame, that hour maybe. It's the same as everything, isn't it? They are either going to move it in London or they're not. If they're not going to move it in London, you're going to get chopped to death. If they're going to move it in London, you're going to make a fortune. You just got to try and find a sweet spot for the range and find one that holds more often than not. It's just about finding that interval. Using in general time, 7:30 start for London and 1:30 start for US. Yeah, so that's about right. I would go from that time up until the open of the exchange. But yeah, test it, back test it. That's what it's all about. There will be a range where you'll get the vast majority of movement, but like I said, it quite often will change every day. Look at that. See that one? Monday. That was London on Monday. So you got to be careful. Break long, break short, break long, break short. Definitely break short. New York. Actually, that's 1:30. That's before New York, I think. Yeah. That's the New York Open. They even sat there for half an hour in the New York Open. I've never had any much luck with it. Basically, it's kind of a variation of the London breakout strategy. The London breakout strategy, I've proved myself over and over again, just does not work. Doesn't work. I've tried every connotation of everybody's variation of YouTube on the London breakout strategy. I've never found one that actually works. Steve Mauro is one of the founders of the London breakout strategy. I can't get it to work. Don't pop until you hit the stops. False breakout. Back to a false breakout. Steve, that didn't work. Oil just had a bounce. Funny that. What did I just say? What have I just been saying for the last hour? Limit orders. Triggered. Off you go. Reversal alert. Triggered. Off you go. I'm in. The other nice thing about this trade is we've got a gap on oil at 125 ADR. Look, so limits triggered, and they got a gap fill to do. So hopefully we just get a straight V-shaped recovery on this and go straight back up there. Look. Or like that, obviously. Right, I'll leave it there. Anything you need, let me know. I'll be back tomorrow, 7:50, same time. We will see what's happened with these pesky indices. We've just flipped short on the S&P, and we are also short on the NASDAQ, and we are also short on the Dow. So let's hope that the US dollar continues to rally through the roof and drive all these indices down. If all three of these go to 5R, I shall be coming in tomorrow saying, well done, we made $5 grand. We'll see what happens. I'm not holding out much hope, but we'll see. Right, back tomorrow morning, 7:50, same time, 2:20 for the US session. If you need anything, I'll be in the Telegram group. So hopefully we'll see you then. If not, have a good day and see you guys tomorrow.